Hello dear traders and partners of AMarkets. My name is Daria, I'm the financial advisor, and today we are going to discuss the situation in the global financial markets. So let's get started. The euro continued to fall after a slight rise on a Friday amid a weaker dollar, but within sight of its best monthly gain in a decade, helped by bets on rising expectations for a US rate hike. On the data front, Eurozone inflation rose to 7.5% in April from 7.4% in March, in line with expectations, driven by persistent increases in energy and food prices that were exacerbated by Russia's invasion of Ukraine. The European Commission had forecast shortly before the invasion that the Eurozone economy would grow 0.3% quarterly, so the preliminary data, if confirmed, would suggest that the war and the related jump in commodity and food prices had cut growth by 0.1 percentage point. Economic growth in the euro area has been slower than expected in the first 3 months of this year. It's worth noting that the hawkish expectations from the week's Federal Reserve meeting and the economic fears emanating from the bloc, mainly due to the Ukraine-Russia crisis, exert downside pressure on the Euro-USD prices of late. Next, GBP/USD and sterling rose against the dollar at the end of the previous week, but today it continues its sharpest monthly decline since the October 2016, while against the euro it maintained its position. Investors are still focused on monetary policy tightening ahead of next week's Bank of England meeting, which may concede a dovish minority, further weakening the pound. The British public's inflation expectations have fallen after rising for months, according to a survey that the Bank of England tracks when it considers how quickly it should continue to raise interest rates. The Bank of England is going to continue the streak of rising interest rates. The BOE elevated its rate in the last meet by 50 bps. This time a similar extent is not expected, as the street is forecasting a 0.25% rate hike, but the streak of hiking the rates will continue to remain intact. Last saw USD and the price of gold fell below $1,890 amid a strengthening US dollar index DXY on heightened expectations of a decent rate hike by the Federal Reserve. Uncertainty over the announcement of the Fed's interest rate decision is causing investors to hide behind the DXY. The Fed is sure to raise interest rates by 50 basis points at Wednesday's monetary policy meeting. The catalysts that require significant attention from market participants are balance sheet cuts and further interest rate guidance. The Fed's guidance will provide a roadmap for moving toward neutral rates. The helicopter money area is moving into a tight liquidity environment, which will lead to long-term changes in various assets. So for now, these are the main trading ideas for the upcoming trading session. Thank you for your attention, subscribe to our channel, and we will do our best for you to reach success trading with AMarkets.